Good morning, everyone. Welcome to the TradeStation Masterclass. My name is Nava. I'm the Director of Client Training and Education for TradeStation Securities. It's always a pleasure to be here to talk a little bit about TradeStation, specifically an area that I like a lot, which is technical analysis and all the different technicalities around volume. We're going to take a look at some custom indicators that we've created for you guys. I'm going to share those indicators with you here in class. These are not new, of course. These are indicators that we've shared in the past. But if you're new to the masterclass, this will serve as a refresher of what those indicators can do for you. Before we get started, the usual disclosures, just keep in mind that every symbol and idea that I talk about is for educational purposes only. These are not recommendations of TradeStation. Also, that active trading is not suitable for everyone, and past historical performance is no guarantee of future results. I'm not sure if you had a chance to look at the website that I was on just a moment ago, but we are going to do an in-person masterclass in Chicago. This is September 24th, one full day where we have a great lineup of speakers, and we wanted to extend the invitation to everyone here. So let me just put it right here in the chat so that I don't forget. Okay, so this is going to be an in-person masterclass, Chicago, and the date is September 24. And I'll put the link here for registration. There we go. And if you use an offer code of options 100, you will get a $100 discount towards registration fee. So if I scroll down, let me share my screen because I'm not sharing. I went through the disclosures and the intro, and I wasn't sharing my screen. Probably, maybe I was. Yes. Okay. There we go. So this is a landing page, that link that I just shared with everyone here in class. And if you scroll down, you'll get information about the class. You'll also learn that this class, through an exclusive commission rebate, can be completely free. It's not a ton of money, but at the same time, and you can register, and in a few months, you'll get your money back through a commission rebate. But you can see the line of speakers. We have guest speakers from the CME Group, from stockbrokers.com, Nava, the OCC. So make sure that you take some time, check the link, and see all the different speakers we have in the lineup. And if this is something that catches your interest and you'd like to attend, just remember that's Wednesday, September 24th. It's going to be a full day from 8:30 a.m., finishing up with a cocktail celebration. Okay, so take a look. And if you have any questions, please send us an email. education@tradestation.com is our email address. And you know that you can always send us questions there. So thank you for that. Let me go ahead and close out of this web page and go over to my TradeStation platform. So one of the things that I wanted to talk about is intraday volume analysis. And I'm going to share the link of the custom studies one more time so that you can have them and install them on your TradeStation platform. But let's go ahead and talk a little bit about volume and the way that is represented on TradeStation. Right now, I'm looking at NVIDIA. And this is a 5-minute chart of NVIDIA, by the way. This whole concept of volume is the ability for you to compare volume intraday in a way that makes sense. Because sometimes when we look at average volume, yes, we have a mathematical formula and a calculation that provides us a volume average, but when you think about it, it's not technically correct. And I'll tell you exactly what my thought process is here. I'm going to disable account orders and positions so that I don't get distracted with any open positions or any open orders. All right, there we go. And I'm going to go here to studies, and I'm going to add the study that's built into TradeStation that calculates a volume average. Everyone has access to this. Let's go ahead and take a look. All right, let's see, that's volume AVG, this one right here. I'm going to put it right here on the screen. All right, there it is. This is the way that volume average looks like when I put it right out of the box. You can see that it's color coded based on the price of the candlestick. So whenever the price of the candle is higher than the previous one, it'll paint the volume in a cyan color or blue color. But whenever the price of the candle is lower than the previous candle, it'll paint the volume red. So that's the difference between the blue and the red. And the yellow line that runs across my volume is just volume average. Now, volume average, if you look over here on the right-hand side, at the moment is 1.6 million. But then the question is, what exactly is this average for? Based on the calculation of the indicator, that's an average for the last 50 bars. Of course, how many bars are in a day? That all depends on the time frame or the interval that you've selected for your chart. In this case, I have a 5-minute chart. So that's going to determine how many bars or how many candlesticks exist in a chart. It's important to understand that because most of the indicators, strategies, analysis techniques, they are going to use bars in order to calculate. So changing the time frame, of course, it's going to change that the way that the indicator will calculate. So let's go back to the number of bars in a day. The stock market, in this case, specifically NVIDIA, starts at 9:30 a.m. Eastern Time, and it finishes at 4 p.m. Eastern Standard Time. Now, if we think about it, every hour has how many bars? 12. Why 12? Because if you divide the 60 minutes of each hour by the time frame of 5, you get 12 candlesticks, 12 bars. If you multiply 12 by 5, you get 60. So you do the inverse calculation, it also works, but every hour has 12 unique candlesticks. Now, how long is the stock market open for? If you count the hours from 9:30 a.m. to 4 p.m., you're going to get a total of 6.5 hours, so 6.5 hours. And if you multiply the 6.5 times the 12, I believe you're going to get a 78. 78 candlesticks per day. Now, the parameter that the volume average uses down here is 50. Now, 50 is just a default value, but it's not a whole day if I'm looking at a 5-minute time frame. There's only a portion of that. More interesting is the fact that today's day, it's still building. We don't have 78 bars today because the market's still open. It is still 11 a.m. Eastern Time, and we're still building candlesticks as we go along. So the indicator at the bottom, when it says, okay, I want to calculate an average that goes back 50 bars, that's very subjective because that doesn't really entail a full day worth of activity. It doesn't entail that you're getting an average for just today or just yesterday. It's a mix of everything because it includes the very first candlesticks of the day or the very first bars of histogram volume, but it also includes a little bit of yesterday. Not only that, but it includes a time period that is usually very active. And there's spikes in volume because it's very normal to securities where you have this bull pattern. You get the most activity towards the beginning and the end of the day, and it creates this bull in volume. If I squeeze the chart here, you see it happening every single day. It goes up, down, up, down, up, down. So it creates that pattern. When you go back and you select a group of those histogram bars and you want to average them, of course, that spike that happens in the middle of the day is going to have an effect on that average. So those are type of things. We're not saying that the volume average down here is completely wrong and it's completely unusable because it's a good indicator. Everybody that's using volume needs to be aware of what that average represents. So there's no surprises. I'm getting a 1.6 million share average. What does that mean? That in the past 50 candlesticks, there's been an average of 1.6 million shares traded. Right now, the volume is down here, 408,000 shares. The indicator, this particular indicator, it's designed to generate an alert whenever the volume, the current volume, exceeds the average by a certain percentage. That's the way that the indicator is built. And it's interesting that we can identify areas of high volume whenever it exceeds it. Now, you're going to notice that for the most part, at the end and beginning of the session, the bars are going to be larger and they're going to spike past the average, and those are going to generate alerts. Very rarely, you're going to see in the middle of the day volume bars that exceed the average. It's just the way that the average is calculated and how the average is plotted. So let's go ahead and keep that in mind because I'm going to show you another way that you can represent a volume. So let's go here and add another study. I'm going to go here to add study. And I'm going to select the same study, but I'm going to do something to it. So I'm going to go here to volume average and then click OK. So you can see that we have the same indicator added twice, but I'm going to do something to my indicator. Okay. For this, I'm probably going to have to use a different, yeah, so that I can change the volume, I'd have to use a different data stream. So let's hang on here with me. What I'm going to do is I'm going to create a multi-data chart so that I can set one security to a different volume use. And I'll show you, it'll be clear to you once I finish this example. I'm going to go to data and I'm going to add a symbol. If you didn't know this, you can add up to 50 symbols to a chart. But I'm going to add here the same security, NVDA, plotted. So it plots right here at the bottom. I'm going to modify the one at the bottom because I don't really want to see it. So I'm going to go here to the scaling and I'm going to, is it the scale? Yeah, I'm going to make it here subgraph hidden. But one more thing that I'm going to do is for settings, there is a section that says for volume used, and I'm going to set this to tick count. There's two ways that TradeStation represents a volume. The default one is number of shares, but you can also set it to the number of ticks or number of transactions. So let me go ahead and show to you exactly what I mean by that. All right. Okay, so we're back to the way that the chart was just a moment ago. We made that second symbol, NVIDIA, hidden, still there on the chart. It's still streaming real-time data, but it's not visible because we selected a subgraph hidden. And now I'm going to format the second volume indicator that I have here on the screen. And on the general tab, I have the ability to set it to that data number 2. Because if you guys remember, data number 2, I told it to use number of ticks for volume instead of number of shares. And number of ticks is going to count the number of transactions. I'm going to click OK to this. And notice how the volume changes. So now I have two representations of volume. One right here in the middle that gives me total number of shares. And then the one here at the bottom is going to give me total number of contracts or shares traded. So you can see two ways of expressing activity. NVIDIA trades about 1.6 million shares every 5 minutes, and NVIDIA trades about 6,124 times every 5 minutes. That's an average. Interesting, right? You can express that activity in so many different ways, but the volume profile, if you look at the indicator itself, is similar because activity is represented on both indicators in a similar fashion. Now, one thing that is missing from the TradeStation list of studies is to take these two concepts and combine them together. Okay, yes, it's true that I may have a ton of shares in one bar, and it's true that I may have a ton of trades in one bar. But what about the trade size? Trade size is a great concept because it tells you when big institutions and hedge funds and big clients are submitting orders into the market, knowing exactly where they're moving and how the pieces are being moved based on the trade size. We don't have an indicator that monitors trade size in TradeStation, but we've created one for you. In that zip folder that I submitted right there in the chat, you have a custom indicator that does that for you. And once you install the indicator, you're going to have a workspace that has the indicator. The indicator looks like this right here at the bottom. I'm going to add that same indicator, but I'm going to add it on the chart that I just built so that we can compare. So let me go over here to my untitled workspace, and I'm going to go to studies, add study, and the indicator is going to be named with the prefix @MC. Remember that @MC is where all the masterclass indicators are going to be grouped. And this is @MC. Let's see if I'm able to intraday volume. It's one of these. They're sorted in alphabetical order. Sometimes, even in the group, because there's a lot of masterclass indicators, sometimes I just have a hard time finding it. Let me go back here to this workspace and see what it's called. Okay, it's called average trade size. So let me go back in here, studies, add studies. All right, add MC. Let me go up to the A's, average trade size. Here it is. And I'm going to click OK. There we go. Graphically, I want you guys to see that we're not anymore affected by this bowl pattern on the indicator volume. There may be some instances of it, but I want you guys to see that the volume profile or the histogram, it's a little bit more, there's more variation in the values of the histogram. That gives you an idea that we've separated our volume analysis from that bowl concept that is very natural and very characteristic of volume, more active at the beginning and the end of the sessions. How did we do that? We take the number of shares and we divide them by the number of trades. It gives you trade size. So this indicator is actually tracking the average trade size for the last, let me put and check the inputs here. This is, 30 bars. So it's just taking 30 bars and averaging the trade size. For certain moments, you can tell, when the big players are coming in, whenever you have a trade size that is increasing. Let's go ahead and take a look at the current bar right here. The current bar is exceeding the average right now. You can see that if I click on the background and I hold, you can see the two values at the bottom of that data tips window. The trade size right now is 260, where the average trade size is 254. For the past 30 bars, we already opened up a new candle, but because remember, the candle is going to open every 5 minutes. Now, let's take a look at the current candle now, because now the trade size is even bigger. We have a trade size of 300 when the average trade size is 255. What does that mean? That the trades are getting larger. Are there more institutions coming in and playing or trading NVIDIA? Maybe, but now you can see that as new trades come in, now we are at the bottom or below that average. Let's go ahead and compare the one that just closed so that we can take a look. So we have 258 trade size. That means that in average 258 trades, shares are being traded. Not something light. NVIDIA is trading at 178. So if I multiply the price of NVIDIA times the average trade size, in this case was 258, that's a $45,000 investment in average, which is significant. Some histogram bars here are even larger, but I just want you to get into the mindset that you can see that's a bar where the average trade size was 45 grand, and you can see how significant those trades are. So different ways in which you can monitor volume, and this is one of those studies that you can utilize to see how the trade size is being affected. Let's go ahead and take a look at another one, because I think there's more value in analyzing volume in different ways. For example, the volume average indicator up here. We said that, the average is just looking at 50 bars back, different time frames, is looking usually covering an area that is usually very active, which is the closing of the previous session and the opening of the current session. So ideally, what you want to compare is how is the volume right now compared to volume yesterday, but at the same time. No, it's 11:22 in the morning right now. How does the volume compare right now to what happened yesterday? That's the type of comparison that is useful. Is the market more active today than it is yesterday? Because for the most part, if you are like close to one of these spikes, your volume is going to be somewhat skewed. Why? Because these spikes don't happen all the time. They only happen at the beginning and the ending of the session. But if you were to compare the average of one time with that same time historically, then you're onto something, because then you know, oh, if the volume right now is so and so, but yesterday it was half of that, then you know that today you are on a day that has significant higher volume than yesterday. Now, this indicator that we have in the zip folder tracks volume in that manner and provides you a way for you to compare intraday volume bar per bar. Let's go ahead and take a look. I'm going to open up the workspace. This is the workspace that is part of the zip folder too. And so in addition to having these custom studies, you also have custom workspaces that you can open up. Just be mindful that you will need to install the study before you open up the workspace. But this study at the bottom is going to accumulate volume from the very beginning of the session all the way to the end of the session. And that's why it looks like this wave that is incrementing in size, but as soon as the session ends, it just resets and drops to zero. That's the look and style of this study. So it's not wrong. It's just always think about what is the indicator trying to tell me. This is intraday volume. In order for us to compare volume from one session to another, we have to reset it every single time at the beginning of the session. Now, there's multiple things happening here. So let's go ahead and talk about them a little bit more, just to give you an interpretation of all the colors and what's happening here on the screen. The crosses that you see on the indicator represent today's volume. The histogram is the average volume. So whenever you see the crosses plotted above the histogram, you know that you are in a day the volume has exceeded the average. So like, for example, today, we are trading where the volume activity is higher than the average. Yesterday, not so good. Look at all the crosses here. The crosses are overlaid on top and a little bit lower than the histogram. What does that mean? That yesterday's volume was below average. So just looking at where the position of those crosses are, whenever the crosses are above, you are in a day that exceeds the volume average. And whenever they're below or on top of the histogram, you are in a day where that day's volume is lower than the average. Now let's take a look at color. The main two colors are magenta and cyan. So those are the two main differentiator colors. So whenever you see, not here, okay, yes. Whenever you see magenta, is because that day's volume is below the average. That's what's going to paint it magenta. Like yesterday, magenta candles or magenta histogram bars. The cyan one or the blue ones is because the volume is higher than the average. But we have some exceptions here. We have yellow as well, because the yellow is what matches the alert. Whenever you have volume that exceeds the average by a certain percentage, then you know that you've exceeded that amount and it's going to paint that bar yellow. So when we see a lot of yellow, is because the volume has exceeded that threshold bar per bar. Right now, the default is 125%. So if today's volume is 125% or higher than the average, that's what paints the histogram yellow. Does that make sense? I know there's a lot of colors going on, and it just makes sense to look at all the different formulas so that we can understand and interpret the indicator the right way. Another color that we see is the color in the crosses. Now that's a little bit more, I wouldn't say complicated, but it's based on the rate of change. What the color of red and green is trying to measure is the rate of change of today's volume from one bar to the next versus the rate of change of the average. So it's just a straight calculation. It looks at the prior bar, today's volume, and subtracts it from today's bar. And it measures how much that volume has changed. And it does the exact same thing for the average. And then compares the two results. If one is higher than the other, it's going to paint the cross. It's going to paint the cross green if the rate of change in today's volume is higher than the average. And it's going to paint it red if the rate of change is higher in the average. Confusing? Yes. If you want to take a look at the formulas or the specific formulas, what I recommend is for you to take a look at easy language. Sometimes people understand what the calculation is better by looking at easy language. Sometimes it's not as clear, it's a little bit more confusing. But I'm gonna show you a few things here. I'm gonna right click on this indicator and just pinpoint a few formulas that are in the easy language code, okay? Maybe when you see the formulas, it just makes a little bit more sense. Okay, so this is an indicator that has a lot of code. If I scroll down, you're gonna see that there's a little bit over 200 lines of code. So somebody went through the work of creating this indicator for us. And the basis of this indicator is the concept of buckets. And what it does, it just takes the trading session, because this is an intraday indicator. It takes the session and it divides the session into buckets based on the time frame. Remember that example that we talked about? How many bars are in a day? If you have a 5-minute bar and you're looking at the stock market, 9:30 to 4 p.m. Eastern time, there are going to be 78 individual bars in that session. That's the number of buckets. And every candlestick will be its own bucket. So the 9:30 a.m. bucket, the 9:30, let's make it the 9:35, because the candlesticks have a timestamp of the closing time of the candlestick. So the 9:35 bucket is created. The way it creates it, because it has to have a 9:35 bucket today, a 9:35 bucket yesterday, and a 9:35 bucket the day before that. And it has to take all these 9:35 a.m. buckets and create an average. And that's the way that you know if the 9:35 volume right now, how does it compare to the 9:35 volume of days prior? Well, that's exactly what this indicator is doing. So buckets is a concept that this indicator introduces, and it does a calculation. This is a what's called a function that calculates how many minutes are in the session. And then it takes the minutes in the session and divides that by the bar interval. Exactly what we did in the example about, oh, we have 5-minute bars and there are exactly the same. It does the calculation for you. And it's great that this is flexible, because not only does it do it for stocks, it also does it for futures if you're a futures trader. What I wanted to show you down here is, let's see, is the crosses. So this is going to do all the plots, but the crosses, and this indicator is longer than usual because it also works in radar screen. So it has to do certain things different in radar screen. But if I scroll all the way to the bottom, here it is, line 198. This is what sets the color of the cross to green or red. And notice that it just takes today's cumulative volume and compares it to the cumulative volume 1 bar ago, and then takes the average, the bucket average, and subtracts the bucket average 1 bar ago, and then it compares the two values, value 1, value 2. If it's greater than value 2, meaning that if today's volume or the change in today's volume, if it's greater than the change in the average, then it sets it green. So always come back here to the easy language just to take a look at the exact formula and have an understanding of what it's doing. So if I go back here to my chart, I understand what the color of those crosses represent. Green means that today's volume is increasing at a faster rate than the average. And if it's red, vice versa. The average was increasing faster than today's volume. Just to recap, again, magenta and cyan, those are the two opposite colors. If we are below the average, magenta. If we're above the average, cyan. And if we exceed the average by a certain threshold, it's going to paint the histogram yellow. Great indicator for you to look at a volume and compare, the exact time today with prior times. This indicator is also available in radar screen. Let me go ahead and pull it up. It is displayed in column format, which is pretty flexible, and it helps us monitor volume in a whole list of symbols, not only one in particular. So let me show you a few things we can do here. Let me remove some of the symbols that are not providing volume data, but some of the calculations that we saw in charting are also in here. We have the alert. We already talked about the alert being whenever a candle exceeds the average by a certain percentage. You have the volume percent. How much more volume do we have on the current session than the average? You have the average bar volume and today's volume. All right. So now remember that this indicator is going to look at the 5 or the interval that you have in radar screen. So when you look at the average bar volume, this is the average per on that current bucket and what the current bar is at the moment. When a new bar is created, then it's expected for that volume to be lower, and it'll increase as the time passes. Let me go back here to, let's I was looking at NVIDIA. So that's today's volume. It's cumulative volume. Okay, perfect. Let me go back here to my radar screen. The green and the red here is just giving you the acceleration, the same thing that we saw in the crosses. So whenever there is a higher rate of change in the average than in today's volume, it's going to be painted red. So whenever you see a green is because today's volume is increasing at a higher rate than the average. You see the cyan and the magenta, the same way that you see in charting. So whenever we are below, it's going to be magenta. So you see a whole collection or a whole group of symbols that are below average. That's very telling about a trading day where you can see that most of the securities here are magenta, meaning they're not moving as much as they have in the past, so many days. I believe that this is the 30-day average. There's a few exceptions that are above the average and a few that are beyond that threshold of 125%. And those are the ones that are generating the alert. What's happening to those right now? Of course, you can say, give me or show me a filter, and I can say on the alert equals, let's see if I can type in here. No. So what I would do is, instead of choosing that, I would choose volume percent and say greater than 1.25. So now you can see how the radar screen is filtered, and I can see a total of 11 symbols that are triggering the alert right now. These are symbols that are exceeding the current bar's value. The current bar's volume is exceeding the average by more than 125%. That's what the indicator is trying to tell everyone. I want you guys to take these indicators, put them on your TradeStation, experiment, see how they're working on your side, see if you can find any value in using them in your everyday analysis. But I think this is a great way for you to identify securities where volume is giving you a signal that something's happening to them, and maybe it's worth watching and finding out what's happening to them as well. Okay. All right. I don't see any questions here. I've submitted all the links in the chat. If anybody has any questions, please come over or send me an email, education@tradestation.com. I want to thank you guys for attending this class, and I look forward to seeing you in my future sessions. Remember the masterclass in Chicago. It would be great to meet you guys in person. Have a great afternoon, and I'll see you guys later. Bye-bye.